Airnauts, and welcome to this daily market commentary for Thursday, the 20th of June, 2019. Hope you're all enjoying the week, trading well, and looking forward to the weekend. I know I am. So Thursday is upon us. Where to start? The day after the Federal Reserve rate announcement and statement, things are on the move. Well, pretty much most things. Except crypto, which began the day fairly quietly. BTC crawled back up to 9,300 and ETH to $268. But elsewhere, it's a mixed market in tight ranges as attention turns to other asset classes, which is the way it stays pretty much until the end of the USD when BTC decides to go on a one coin mission, trading up to a high of 9,600, which is a new high on the year. Nothing else really seemed to follow. And at time of recording has just backed off a little, back down to 9,500. But it does seem Bitcoin is benefiting from the lower interest rate environment, which I've been talking about during the week. Maybe another gold in the making there somewhere. So crypto aside, today has been seen the sort of moves you might have expected to have seen immediately post the Fed yesterday. Equities globally have soared higher. The DAX was up over 100 points before Wall Street had even opened, and the Dow Jones futures were pointing to a higher opening by around about 250 points before the beginning of the US day. Meanwhile, the dollar has been sold aggressively in Asia and Europe, with euro up to a high of 113.15. Dollar yen down to a low of 107.50. Sterling had rallied up to a high of 127.25, but it pulled back somewhat down to 126.80 after the Bank of England had their interest rate announcement and statement. There were no changes in rates, but the Q2 second quarter GDP projection was downgraded from plus 0.2% down to zero. Obviously, ongoing Brexit issues are taking their toll there, and the Bank of England are taking that into account. So that saw sterling pull back somewhat. Elsewhere, the Aussie rallied up to a high of 69.35, and dollar CAD also dropped down to 131.50. So it really was a really poor day for the dollar. Gold, on the other hand, rallied up to a high of 13.93, marking a new 5-year high, and the US 10-year yield dropped down as low as 1.97% at one point during the day. Its lowest since late 2016. Going back to gold, I actually have a gold chart up here that will be just some very simple technical analysis on the day, something to bring to your attention around what's been going on in the yellow metal. So the USA gets going. A weaker than expected Philly Fed manufacturing index really just added fuel to the fire for a weaker dollar and a potential rate cut coming up next month. Of course, no US trading day would be complete without a tweet from the president himself. And today's tweet was, "Iran made a very big mistake," which was in direct reference to the shooting down of a US drone in the Straits of Hormuz earlier in the day. Oil immediately jumps 6%, and US equities begin to slip, with the Dow Jones off over 200 points from its highs on the day. Only real mover in FX on that remark was dollar yen, which went down to what would be its low of the day, around 107.23. Then out of nowhere, it was at a press conference a little bit later in the day. He completely softens his tone and says basically it could have been a mistake, could have been done by someone, quote, loose and stupid. Read into that what you like, but back came equities with the Dow Jones rallying back those 200 points to end up 250 points on the day, and the S&P making a new all-time high. Will there ever be a day when the markets are not affected one way or another by Mr. Trump? Apparently not, but that would be boring if if it wasn't, right? So despite trade wars and a fairly poor economic outlooks in Europe and the UK, and the threat of possible US military action against Iran, interest rates tumbling down to what you would classify as some fairly uncomfortable levels, certainly in some of the European countries where rates have effectively gone back down to zero again. Equities keep marching on and the dollar suffers. And that's really been the tone of the day. You do rather get the feeling that maybe something has to give here a little bit. It's going to be interesting to see if this can continue. It's a daily thing. We'll just keep watching and see how it goes. But it does feel like something kind of has to give in the background. So on quickly to a little bit of technical analysis. I'm very loath to bring up that US dollar index chart, the DXY chart that I showed you yesterday, only because I just don't want to keep showing the same chart. I told you to keep watching it. What it did today with the dollar sell-off, it really tested that line of support and also the 200-day moving average on that. So please bring that chart up yourself. Keep looking at it. I think we're at some pivotal levels here, which is what I kind of said before. Something kind of seems to me has to give in the background. But for today, I thought I would show you a gold chart, a longer term one, just to highlight the significance of the recent price action. Really talking about this month, you can see today's price action here has taken us up through this high here around 1375, which actually goes back to July of 2016. Now, obviously, this is a very big picture view, and I understand that may not be something that everybody looks at, but it is significant, because we are having some changes in the markets at the moment with the lower interest rate environment, which has really kind of hit very pretty suddenly over the last couple of months. And obviously the dollar weakening as well, and we've seen this pretty significant spike in gold through the month. Now, obviously, the month is not over yet, so this candle here is not actually finished. So it's definitely one to revisit at the month's end. But I think we can agree that this break here looks potentially to be significant, and might allow for some interesting trading opportunities going forward. Anyway, for today, that is about it. It's been a very, very busy day, and hopefully we'll have some more volatility moves to talk about tomorrow. Wish you all the best of luck, and speak to you soon. Cheers.